Okay, good afternoon, everybody. Welcome to Friday, my favourite day of the week. Welcome to today's webinar. The topic today is contractor versus employees. What's the distinction and what's the risk? This is a really topical area at the moment, with the ATO taking a keen interest to ensure that businesses are meeting their employer responsibilities. It's also an area we want to ensure clients get right, because with all of the increased ATO scrutiny, combined with penalties that can accrue quickly, the risk is greater and mistakes can become more costly. My name is Daniel McCulloch. I'm a chartered accountant and an associate at Smart Business Solutions, and I'll be your moderator today. We do have some time for questions at the end of the session, so if you have any, please send them through and we'll endeavour to answer them. Just a little bit of housekeeping before we begin. For those of you who are unfamiliar with the webinar environment, actually, I trust you're all familiar by now, but just in case, these are the Zoom settings. Let's take a closer look at the controls. You can use the chat facility to send text chat to all participants or privately to specific participants. And finally, you should all be on mute for this webinar. I'd now like to introduce today's presenter. Shannon Smith, founder of Smart Business Solutions. Shannon has been advising small and large businesses for over 25 years, and prior to founding Smart, worked at one of the world's leading accounting firms in Melbourne, Prague, Amsterdam, and New York. Shannon is a long-term local of Peninsula. He's extremely passionate about small businesses and further, Shannon is a founding board member of the Committee for the Mornington Peninsula and has been recognised as one of Australia's leading tax experts with an appointment to the Australian Government's Board of Tax Advisory Panel. Without further ado, I'd like to hand over to Shannon today to take you through today's presentation. Welcome, Shannon.
Great, thanks very much, Daniel, and thanks everyone for joining us today in another, I guess, lockdown, coming into another lockdown weekend. I'm sure we're getting a bit frustrated with that at the moment. We do find this topic to be quite topical, I guess, at the moment. We're getting a lot of questions from clients, and I think just even wanting to have that flexibility as we come back out of this lockdown and into the open, back open again, that, businesses are going to want that flexibility of having a contractor potentially and maybe not having, the staffing. So it is something that we're actually seeing, as Daniel said, the ATO taking a very keen interest in it and a lot of high level ATO activity. But we're also seeing actually a lot more interest from a business perspective. So today I want to go through some of the key aspects, and most importantly, all of you on this webinar will be business owners. You are the one that has the risk here, not necessarily the actual, contractor or employee or whatever they want to call themselves. It really is coming back to the business owner and how can you protect yourself and try and manage your own risk as well. So, and the ATO does actually have a very high success rate in challenging the treatment of contractors and having them deemed to be employees and then applying superannuation on that. The superannuation liabilities that could be charged, the SGC, that could be charged on that, not only is it the superannuation, but actually the liabilities can accumulate very quickly in that you will have a penalty for not having paid the superannuation in a sense on time, and that will add up very, very quickly. So, why does it matter? We've got high use of contract labour at the moment, and I think we're going to see more of that coming as we come out of this as well. The ATO is really hot on this area, and a lot of it does get is from tip-offs to the ATO that they will get. Usually when we see a client undergo a superannuation guarantee review, it's usually the employee-contractor has tipped the ATO off on that, or potentially have gone to Fair Work Australia on that as well. And just the risk, there really is the risk from the business owner's side of things, and it tends to be when you do get it, when it does go further, that it tends to fall on the side of the contractor and employee. So what's some of the impacts of getting it wrong? You potentially, you may have PAYG withholding if they do deem the situation to be that of an employee, and I'll go through the definitions between this. There will be then the superannuation, even if they're deemed to be a contractor, potentially that you are liable to pay super to, there will be potentially that. There may be some employment law issues, and that's if your Fair Work Australia gets involved, and are they deemed to be an employee? Should they have been getting annual leave and other aspects like that? And you may, depending on the size of the business, have some payroll tax obligations. And all of this comes back to basically back to the employee, the business owner. None of these actually become risks to the employee-contractor. So that's really important, that as a business owner, you've really got to have a policy in place, and I'll give you some ideas on that as we go through, so that even if you do have that scenario of a contractor telling you that they're a contractor, that you can cover yourself and have that in your back pocket, so you've got that there. Now, when I look at the definition of an employee, there are actually, frustrating as it is, two definitions of employee or different definitions for two different aspects. You've got the superannuation guarantee, and then you've got the PAYG withholding. So there's two aspects that you need to consider on your definition of an employee. So normally, when you look at, to say, a common law definition of an employee, or what is an employee, it's normally where there's a relationship between the employee and employer. It's kind of a contractual one, and it's usually referred to as a contract of service, whereas often that can be contrast with a contractor relationship, which is usually a contract for services, if that makes sense. So it's a very close line on that. An independent contractor is generally contracted to achieve a result. We want you to, and here's the result we want you to achieve. And that can be distinguished with an employee. They're actually more of providing that light labour to actually perform it, and so there is a bit of that distinction, and I'll go through some of the aspects of how can you actually make that definition so that you've got yourself covered. Just to highlight that, just as directors, again, if you do get a director's payment yourselves, that will be subject to super guarantee and your PAYG withholding. And now, if we have a contractor, with a contractor, the most important was where they've been contracted wholly or principally for their labour. And this is the part that this is the risk for you as a business owner as well, where they're not an employee, but are they a contractor that should be having superannuation guarantee applied? You won't have to do the PAYG, but this is the area that we often see a lot of businesses have the problem, where they actually say, well, they're not an employee, they're a contractor, therefore I don't have to pay super and I don't have to pay PAYG. This is the risk where we have to do the labour. So what do we mean by a contract for labour? So a contract for labour is where they've been basically remunerated mainly for the actual labour that they've provided. The ATO has a statistic there that they kind of say, look, if more than half of the value of the contract is for the person's labour, which may include physical labour, mental effort or artistic effort, then it generally would be treated as remunerated mainly for the labour, and therefore should be a contract for labour and have the superannuation paid on that. They would have no right of delegation, so there's no ability for that contractor to delegate it. You're actually engaging that contractor, and they can't delegate that work to another party. And it's actually not paid to achieve a result. So when you actually have a contractor come in and you say, complete that kitchen for me, you're actually paying them for a result. But when you have a contractor coming in who is actually not paid to achieve an overall result, but they're actually being paid for their labour, that's when it would be deemed to be a contract for labour, not a contractor, and that's where they would actually be subject to having to have superannuation, superannuation paid. And the reason that this is important to understand overall, especially when you're actually negotiating with a contractor coming in, is because you're actually doing your budgeting and the job costing on the basis that you're actually paying them a certain amount, for example, per hour as a contractor, and you're not expecting that at a later point you're going to have to pay an extra 9.5%, or if you knew that they were going to have an additional 9.5% paid for them as well, you probably would have considered that in that overall rate that you would have been offering them when you were negotiating that. Now, just to highlight, and there's been a lot of court cases over the last 18 months in this area, and one bit I want to just highlight for you, and going through this is because, you might be we're not at barbecues at the moment, but when you get back to being able to go to a barbecue over the Christmas break and someone says, oh no, look, you should be fine. I've got a contractor. I don't have to pay super on them because of these particular cases. One thing that one of the judges came out and they said that we've really got to look out for generalizations, whether it be in the industry, it needs to make sure that you know that you look at every situation on its own facts and circumstances, because no one situation is the same. There was, for example, you see a lot of contractors and labour hire contracts in the trade industry. So in the trades, we see that all the time. And what I'm encouraging all of my trades that do have those contractors is to go through a table of different aspects and really make sure that they do satisfy that. I had actually someone that was doing some work for us one day, and they're not a client, but they're actually talking about they had someone as a contractor for them. They were a subcontractor, been working doing the joinery, had been working there 4 years. Everything seemed great. As soon as they left, someone said to them, no, you should have been getting super. And look, they were actually working every day, literally similar to that of an employee, whilst they were they were treated as a contractor. And that's what the person wanted as well, to be treated as a contractor. There was no superannuation paid. Now, had this business owner known that they were going to have to pay super, they would have actually negotiated a different rate per hour with this person. So the minute this person left, they contacted the tax office and they said, look, I haven't been paid super for 4 years. This business was whacked with not only the super, they tried to appeal it, but they were unsuccessful. And they said that they were whacked with 4 years worth of super, and then they had penalties and interest, which doubled the superannuation obligation. And this was just a local joinery business that was, had someone there as a subcontractor, which is what they wanted as well. So they, often they don't obviously get to the court situation, they'll settle, but it's a very easy, and the risk is all back on the business owner. So that business owner said, well, they've taken a whole different view now when they've got any contractors. So when I talk about the facts and circumstances, what I mean by that is actually going through, and I'm going to go through the key factors, but using these key factors, I would nearly put these in a table for each of your contractors. And I'll talk a bit about the ATO decision tool in a second, but I would go one step further from that and put all of these factors into a table and actually go through with each of your contractors facts and circumstances. I would actually write it up just to protect yourselves as the business to say what you've got. So firstly, we're looking at control. So basically, it's just kind of a classic test for kind of determining the relationship between the business and the worker. And it just works out what is the degree of control that you have over that worker. So the greater the level of control that can be exercised over the worker, so the more that you can control, it's more likely that they are an employee. So it's not just a question of whether the control is actually exercised over that individual, because we can all have great employees that don't need that much control because they know what they're doing, but it's whether the employer has the right to exercise that control. Does the worker operate in their own account? So this is a question of whether the worker is carrying on a business in their own right or merely serving the business operations of the employer. So sometimes this is referred to kind of as they call it in ATO speak, integration in a sense test. But, is the person performing work as an entrepreneur who owns a business and operates a business and that, or in performing the work, is that person working in and for that person's business as a representative of the business, or not, and not of the business receiving the work? So you're trying to distinguish between whether they are coming in and literally, again, providing kind of a labour service, or are they operating as a business? Even if they've only got themselves, are they operating as a business coming in and doing that? So the answer to any of those questions is yes, and the person is likely to be an independent contractor in relation to that work if they are operating in a sense in their own account. Again, then looking at the results. So is the worker engaged to produce a specific result? Then it will be a strong indicator that there's a contract for services being provided, and therefore a contractor. You've engaged them to come in and do a certain task, and this is what you need to be delivered, and that would be more likely to be then a contractor. But it's really coming down to making sure that you've got the specifics of what they're trying to do, because even when you look at results from an employee, you actually hire them to produce results. But it comes down to that case of, would they keep getting paid, I guess, in a sense, and that comes a bit later to the risk level of if they didn't achieve it in a certain time period or there were errors and rework. But really looking at what are they being engaged? Are you engaging them for the hours they're working, or are you engaging them really for producing a result at the end? The other big one is also then on delegation. Are you engaging this person, or do they have the ability to send someone else? And this can be a really significant factor, because if you are only engaging that particular person, then that will kind of head you towards more of being this contractor, either employee or contractor that is then subject to the superannuation. Or are they a contractor that is actually that you could send someone else in their position and undertake that role as well. Then you've got the risk exposure. What happens? Two parts of it. What happens when something goes wrong and there has to be a lot of rework? Who wears the cost of that additional rework? If you're engaging someone as a contractor and they are engaged to produce a result, you would expect that actually, if they've made an error, they're going to have to go out and wear the cost of that error that they've made and that rework. Also on top of that is also looking at from an insurance perspective, what insurance cover do you have in place, and does that contractor have insurance? Generally, an employee is obviously not going to be holding insurance themselves. Another one to look at is tools. Now, just because they don't have tools doesn't also make, there will be some industries that they're not required to have tools, but having a look at it, what is the level of capital investment required for the worker in this role, and is it something that, the tools of the trade that they need to have, if they've got to maintain a high level of tools and equipment, one would be looking at more that they are in that contractor, that independent contractor. So looking at the specifics and really comes down to the circumstances of what you need in that particular situation. Business expenses, are there any business expenses that are being incurred, as a business operations, and what is that contractor actually incurring all that work? Do they have any business expenses associated with what they're actually doing? And then uniform's a classic one as to whether they're actually wearing a uniform even in the business that they're working for as a labour hire service potentially, and they're wearing the uniform of the business. And then the other one, some of the other areas can be just, what's the right for you to be able to, in a sense, dismiss them or suspend the worker? Is that related to more of a termination of a contract? Do you have the exclusive right of the services of that particular worker? And then whether there's anything else under the award. So I would always look at, and maybe something that you're doing yourself as a business owner, I'd call it part of your own risk management strategy, because this 9.5% could be a really big risk if it does come to fruition. I'd be looking at putting a table together with those 9 kind of aspects, and really making sure that you've satisfied for yourself whether they are an employee or a contractor. And then when they're a contractor, is it a contract for labour and therefore probably subject to the superannuation, or is it a contractor where they're really running their own business and you're not responsible for any on costs at all? I've just got, I'll go through briefly just some 3 examples to think about some of the key areas and where that may or may not be different. I know we've got a lot in the health industry. So, just an example of medical practitioner, and you'll see this in a lot of the allied health as well. They've got no right to delegate. The work must be performed by the medical practitioner personally. The fees are paid to an account maintained by often the clinic and subject to a splitting arrangement. So kind of like it's kind of a room fee, which is what they're indirectly paying. Practitioner provides a tax invoice to the clinic, and there's no provision for leave entitlements. So in this situation, are they an employee or a contractor? Even though the medical practitioner did not have the right to delegate the work, the ATO has confirmed in this type of arrangement that it really is a results-based arrangement. and that the clinic really has no, I guess, right of control over how the practitioner operates, and therefore this type of arrangement would be considered as an independent contractor from the facts that are then provided. It is important, even in the allied health, to really look at the details of that, because I have seen when they haven't been, say that maybe they've been a myotherapist and they've been working on a regular basis, 3 days a week, full days, etc. So you really need to need to go down to the facts and circumstances of the individual person as well. Subbies, and I think part of looking at this employer contractor really came about with the trades. It's very common for the trades to have subcontractors working, and most of them are sole trader subcontractors, whether they're in an entity or not in an entity. But it is something to really consider as well, to also decide, go back to those 9 points that I talked about, because some subcontractors would be absolute contractors, others wouldn't. But some of the things to go through would be, again, the ability of them to be able to further subcontract or not. So in a sense, looking at that, that substitution, can they substitute? Can they get someone else to do part of that work for them? Is the payment based on time work or the results delivered? Who pays for the equipment and tools to finish? And that's an interesting one in the trades, because actually even a lot of the apprentices who are employees are required to provide tools as well. Who bears the business risk if something was to go wrong with it? And is the worker independent or not? So continue to monitor it. And the reason I say to continue to monitor it, especially in the trades, is that I've often seen a subcontractor come along, start working, could be with a builder, start working with a builder, and they're working with 4 other builders. So they're subcontracting, just filling in as the builder needed more I guess, workers on there. And then over time, that person has gone from working for, say, 4 builders. Over time, they've gone to working for 3 builders, 2 builders, and before you know it, they're working just for the one builder, and they're working 5 days a week, and it continues to happen. So it is important for you to monitor how long these contractors are working for you, and whether they've actually changed at some point to go from from truly an independent contractor, they had a number of builders they work for, to being just your subcontractor, devoting their whole week to you, that you then would have this obligation from a superannuation perspective, and you just don't want to get caught out with this 9.5%. So it is something I do recommend that you monitor, and whether you just look at that on an annual basis. We saw one with they become a new client of ours. So it was a situation that they had been going through. A business, not in the trades actually, but a manufacturing wholesale business. They had what they thought was a marketing consultant. A marketing consultant start doing some work for them. The marketing consultant worked for the business 1 day a week. They paid the marketing consultant accordingly as an independent contractor. At that point, the marketing consultant actually had a number of different clients. Unbeknown to them, and maybe it's something that not every business owner is going to think of this, but unbeknown to them, that marketing consultant slowly peeled back on the number of other clients he had, to the point that he actually only had them as his one client, and he increased the number of days he started to work for them. So he was actually doing work for them on a regular 3 days a week, every week, which, originally it was just an independent contractor who came in to help with a few different marketing and sales types activity. Now, when he left the company, he then actually contacted the ATO and started to go through this process. And they, unfortunately for the business, they were actually unsuccessful in this. The ATO deemed that the contractor was therefore a contract for labour, and that they were also made to back pay the superannuation right back actually to when they first started with them, and penalties was applied to that as well. And so it ended up being a significant cost to the business, but even the cost of them going through and seeking advice and getting then also legal advice as well to defend it, it ended up being an extremely costly exercise for them, and one that they wouldn't have expected at all. The classic one, just as a pizza driver, and I put this one in there. I realise probably no one on this call is a pizza driver, but you may be having, just in businesses, you may be actually getting people in, especially at the moment. There's a lot of people doing the delivery potentially with their business. So I just want people to be aware of some of these types of situations. And the pizza driver one is a case that's gone through the ATO. It's been I guess it's kind of well documented, because this actually applied to a lot of the big pizza companies. But you've got your delivery drivers. They're required to provide and maintain their own vehicle. Often the company will give them an independent contract driver agreement. Now, with your business, if you're starting to do more deliveries, you may not have that kind of agreement. You may agree on a fixed rate per delivery. Now that we've got so many online orders going on at the moment, give a bit of on-the-job training, rostered to work shifts. They often said the driver had to hold an ABN. So go and get your own ABN. Invoices were provided by the driver to the pizza franchise in this situation. Driver was not obliged to accept any work that they were offered, and they were not required to work exclusively for the pizza franchise. Now, with that one, and that went through all the courts, and I don't know which Pizza Hut, it was a Pizza Hut or Domino's, it was one of those that it went through all of the courts. And actually what they came back with, and the reason I'm highlighting this one is to really think about it for those businesses that, you know, everyone's trying to pivot at the moment, and you're getting people helping with the delivery. But what came back is that they actually said that the delivery of, in a sense, the pizza was core of the business of the employer. And therefore they actually said that the drivers were integrated as part of the business and more employees. They were not contractors, so that, you know, the company couldn't get out of all of those other obligations. They'd be casual employees, so they'd be paid, but they would be then subject to, in this case, superannuation and PAYG withholding. So just something to be aware of. I thought it was a good example, given so many businesses at the moment are trying to pivot yourself to online. And if you're getting employees to come in or workers to come in and help on that. Now, this is the reason why I'm highlighting this as well. How far back can the ATO go? Now, we all know, in a sense, with your tax returns, you can basically, they can go back 4 years to have a look at your tax return if you get your tax return right. The most alarming part of this, because it's related to superannuation and employment, in a sense, employment law, there is no time limit on how far they can go back. They can go back as far as they want, all the way back, and you would be obligated to pay that superannuation. So that's the big risk, and what we've just seen with a few situations. Another question that we do get asked on this, well, can't I just do a contract that says, I've got an email from someone, or we've agreed, that the parties agree that the worker's an independent contractor and they're not responsible for super, and we all agree on it and we all sign on that. Unfortunately, short answer to that is no. Again, it comes back to the other factors, and this is a real risk that a lot of the businesses have faced in the past, because they've had an agreement with someone, and often, let's face it, the independent contractor is the one that actually often is driving this, because they want more money in their pocket today rather than actually having it going into super. So often they're the one that are actually pushing for it. And as business owners, you think, oh, that's fine, I'm still paying the same net amount. It's not an issue. Having this agreement does not actually release you as a business owner from all of the other obligations. And this is why I say it's really, the risk is on the business owner, because at any point in time, if your relationship sours with that particular person that is working with you, they can try and make a claim. And that's why, going back to those 9 factors I talked about, and having a situation of making sure you're documenting those is going to put you in a better position. I know that there are examples of where people say, well, what if I just close that legal entity and make the problem go away, because maybe they've had a lot of subcontractors over the years and all of a sudden it's a concern. Unfortunately, because it is related to employment law and superannuation, directors are personally liable, and the ATO can issue these director penalty notices, and so that's not going to be one of your options. So what can you do? And this is, I guess, the most the critical part. So what can you do as a business owner to try and cover yourself? One, make sure you've got written agreements in place. So if they're employee, it's easy. You've got a written agreement. If you do have a contractor, a labour contractor, arrangement, a written agreement. If it is only an email, then it is only an email. But try and make some clarity on the agreement that you've entered into. And if it is a true subcontractor that you're engaging, often you will have a quote from them or a proposal because it's for a result. So make sure you've got some form of written documentation as to how you've come up with what you're agreeing and how you're agreeing to trade. Then treat, if they are in fact workers, if they are actually working, and maybe that's not what the contractor, the worker may say, no, I'm a contractor, independent contractor. If they're not, then I would be going back to them and say, well, actually, look, the risk on me, we've gone through our kind of 9 key points, and maybe discuss that with them. Go through the ATO online decision tool. So what I always recommend clients do is go through that tool yourself, but also email it to the worker and ask them to just go through and say, look, and I'd be emailing them and saying, look, I want to make sure I'm undertaking my obligations as a business from a superannuation perspective. Can you please complete this ATO online decision tool? Ideally, you've gone through this process when you're in the process of negotiating what their hourly rate is, because you may actually have a different opinion of whether you pay them $50 an hour and you think that's it, or if you know you have to pay super, you may negotiate a different rate if you know that you have to pay super. And that can come back to your written agreements to actually say that if it is found that they, that they do become, if they are working more regularly for you and that you do need to start having to pay super, that the rate may need to be reviewed as a result of that, if that's going to be a situation that you renegotiate. That contract, when they were an independent contractor, you renegotiate a new contract if they are to become a contract for labour or employee, obviously then an employee. But I would go through the ATO online decision tool. I think my nine factors are even more detailed. The decision tool you actually can rely on from the ATO. You can use that as a relying on it as a best efforts. But I would also go through those 9 different factors so that you've got some of the specifics, just so as a business, you've got a stronger case that if this person actually, because usually they're only going to do it when the relationship sours or someone tells them, you should have been getting super, you should go, should go after the business. And it just puts you in a better position to say, no, at the time when they were working with us, here's what the scenario was, and here's what we agreed, and here's the decision tool, here's what the factors were, because often it does happen after the fact. It doesn't happen straight away. I've put, we've got a list of, I guess, the myths and facts, because there's a lot of those out there that people think, if the worker has an ABN, they're a contractor. Well, unfortunately, there's a lot of businesses that there was a time, and this is the whole reason I guess the ATO is focusing on it, that were actually businesses were requesting or pressuring a worker who technically is an employee to obtain an ABN, thinking that would make everything go away if they had that ABN. That's not going to be the case as well, so that's going to be a situation that just because they have an ABN doesn't actually make a difference. It comes down to the factors. Classic one, everyone in my industry takes on workers as contractors, so my business should too. That doesn't actually mean it's right. And the courts have even come out and said, no, you've got to apply to the facts and circumstances. Employees can't be used for short jobs or to get extra work done during busy periods. Actually, the length of the job or how long the period is, or if it's regular or not, actually makes no difference. So it's a bit like your seasonal workers. They can be employees coming in, doing the job, and off they go. So there's, let me just click that on. Oh, I think I've gone too far. There we go. A worker cannot be more than 80% of their time for one business if they want to be considered a contractor. So the 80% rule, or 80-20 as we sometimes call it, relates to personal services income and can change, in a sense, how a contractor may, maybe how it may be, I should have put the last bit in, reports their income on their tax return and claims business-like deductions. But it's actually not a factor as whether they're an employee or a contractor for the purposes of superannuation and PAYG. It's actually completely unrelated. So the 80-20 kind of rule is this personal services income and how they're taxed and put it in their tax return. Nothing to do with whether they're a contractor or not. And I think that's a misconception that people do think that that's the case. My business has always used contractors, so we don't need to check. Whether the new workers, I think you need to start checking each time they come in. Just go through, just for your own, call it your risk management, but just go through checking and then just put that aside and get that done as well. If the worker has a registered business name, they're a contractor. Again, it doesn't make any difference depending on their facts and circumstances. If the worker is a contractor for one job, they'll be a contractor for all jobs. That goes a bit back to the example where there was that marketing consultant that started out and then it gradually went further. And I see it a lot in the trades, how they just evolve over time and end up working a significant amount. So it's not always going to be the case. My business should only take on contractors so we don't have to worry about super. Businesses may actually be required to pay super for their contractors. So if you have a contractor who's basically like a labour hire contractor, they working for you just for their labour under your direction, and if you pay them even as a contractor, you might pay them under invoice, but there will still be a superannuation contribution available to them, a contribution required for them. So you'll still need to be doing that. Those of you that are on zero, you can do that contractor labour hire arrangement super contribution on there. Workers that use specialist skills or qualifications should be engaged as contractors. That doesn't automatically mean that they are a contractor. Again, it's going to come down to the facts and circumstances. If a worker wants to be a contractor, so my business should treat them as one. And just because they have a preference, you're the one at risk. As a business owner, you're the one that potentially, if things go wrong, that's going to be the issue. If a worker submits an invoice for their work, they're a contractor. It helps on leading to that point, but it does not mean it. Again, it's facts and circumstances. And if the worker has a contract that has a section that says that they're a contractor and it's legally, it's not always going to be the case. It's going to come down to the facts. So what can you do as a business owner? Definitely undertake the ATO decision tool for the employee and contractor. So you undertake it, get them to undertake it as well. Discuss and see that you both got the same results, and communicating in an email to that particular worker saying, look, I want to make sure I get my obligations correct. Can you please undertake this ATO decision tool to check whether you're an employee or a contractor? And then you have that. If it's matching, great. If it's not, go through it, and then make sure you've got it in writing. So this will help you, should there be any issues that I guess come up. But the onus is, the unfortunate part is the onus really comes back to you as a business owner, and the risk for the worker is there is no risk. There's only upside for them if they are successful in being able to say that they are actually deemed to be an employee or a contractor, a contract for labour person, and then obligated to have superannuation. So I highly recommend that you just take that little bit of time to just go through a little bit of a checklist for yourself internally to make sure you've got yourself covered on that and have no surprises like these other situations. So I'm happy to take any questions if we've had questions coming through. Daniel, if there's any questions.
Thank you for that, Shannon. We do have a couple of questions.
Okay.
Okay, now we have a question. What about those of us that use the services of remote or virtual assistants?
Yeah, so again, I guess it'll come down to the circumstances of how you're using those particular assistants. So even if they're virtual assistants, again, are they providing a result for you? So I'd go through those 9 key factors. If you're using them through an agency type thing like your Upwork or something like that, you're not going to have that kind of issue. But if you are engaging with them directly, I'd actually go through those 9 factors to say, well, are they a contractor that's permanently in your business? And just trying to look at, well, and so if there's the big one for that one, I'd be looking at results. Maybe they're available, maybe you've got them working a certain number of hours a week, but I'd also be looking at the risk. If there was an error and they had to do some rework, who would be liable to pay that? So just because they're virtual doesn't actually mean that they're not potentially going to come under as a contractor. So I guess a lot of people focus on it being, there's three parts. There's employee, there's the contract for service, and then contract for services. That's the independent contractor. It's this contract for service versus employee that you're really trying to define. If it's an employee, you also do the PAYG, but if it's a contract for service, there's that superannuation obligation. So don't think just because they're virtual, then there's no obligation on that. So I would be just having a look and seeing, and maybe if they're a virtual assistant and they're working for a number of different businesses, I try and find out and see what the contract is that you have with them and how that works. And is it that they actually have other people working for them and that you allow them to actually get someone else to do some of that work for you?
And they might also be located overseas as well, which would have an additional layer to consider there in terms of super withholding, that sort of thing.
Yeah.
Okay, next question. So what if we have a contractor who I think is an employee, but they want to be a contractor and won't work as an employee? What do we do there?
Yeah. So in that situation, I mean, it comes down to the business risk. So if you think they're an employee, they want to be a contractor, I would still be then doing them as a contract for labour and pay the super. The PAYG withholding, well, they've said they're not an employee, so there's no, when I look at that, there's not as much risk on that side. Taxman's still going to get his money because you would have paid a less net, you would have withheld the tax from that perspective if they were an employee, but it's more the superannuation is the risk. And I would be going back to them and saying, well, look, actually, I've gone through the decision tool. You've gone through the decision tool. I've gone through these factors, and and it's basically there is a risk from your side otherwise on that, and so I'd be trying to get that resolved, or going through even whether it's the decision tool or those 9 factors to actually kind of, I guess, agree why those factors may not be relevant. They may be able to then convince you that, look, we're not a contract for labour because of the results test or because of the tools and equipment, but I would actually document how you've then agreed with it, your original aspect and why they justified that they were, so that they can't come back later and go after you for super at that point.
Okay. And what if a contractor doesn't give you their superannuation details or refuses to provide them?
Yeah. So if they don't, I've seen that happen too a number of times. If they don't give you the superannuation details, the ATO does have basically a kind of a super fund that you are actually still required. So you can't just use the excuse, I didn't have the details, I can't pay it. There is basically a super fund that you can pay to from that perspective and at least satisfy the obligations on your side as well.
Great. All right. And next question. So what if the ATO tool says they are an employee and therefore super is payable, but I've already paid them at a higher hourly rate and I wouldn't have agreed to pay that much if I'd known that I needed to pay super?
Yeah, this is actually a situation that we do see, and this is why you'd want to upfront be going through. So this is where it is a bit of risk management for you, because you, as a business owner, now being employer or someone who engages someone contract for service, the labour, you are obligated to pay the super, regardless of the rate that you've paid them per hour, and that you would have agreed something else had you known that you were going to pay the super. The onus is on you as a business to pay the super, and therefore you would be in a position that unfortunately you would have to pay that superannuation. So that's why, I guess, part of a trigger, I know that a lot of people are going to be looking at more contract labour, I guess you could say, or short-term labour. We've had the situations now where people have been able to be stood down and work and now come back to work just 2 days a week, 3 days a week. So I think the dynamics are going to be changing as to how we might be working, which is one of the highlights as to why I thought this webinar would be useful. But the onus is on you as a business owner. So I'd be trying to make sure that you do get this bit right up front so you don't get yourself in that situation, and go through that negotiation with the person to say, well, look, I would have been paying you $50 an hour, and if you can do this up front, if we've got super, then I'm prepared to pay, inclusive of super, that $50, and therefore I'll be paying you less per hour into your bank account. The rest will be going to your super fund. So unfortunately, if it's after the fact, you are still obligated, and this is what's happening when they've gone up higher.
I think you're right. All right. And so what if an employer or business requests that somebody registers an ABN or a company before contracting? what do we do then?
Yeah. Again, just I think highlighting, you know, and companies are doing that. I'd be highlighting to them that, you know, I'd be making sure that they're still going to be paying super. If you are actually going to be operating as an employer, I think you'd find larger businesses now, I think you'd find wouldn't be doing that, when it was mainly a lot of the larger businesses that were doing it. But if a business does ask an employee to do that, then they actually, if they truly are an employee, there will be PAYG withholding requirements, and that's where the business can also get in trouble for not having withheld the PAYG withholding if they've actually, you know, said to them to get an ABN. I mean, we actually see sometimes where businesses have told, and I talked a little bit earlier about the interposing entity, but, you know, they've said to them, look, set up a company and you can operate like that. Just because they're in a company, again, does not relieve. It does certainly help, let me tell you, it does certainly help to show that they're not an employee, but it doesn't 100% just relieve them of the fact that they have the super as well.
Okay, I have another question here. Okay, so, hi, electrical business here. If we get another subcontractor to help out a day here and there, 2 days, 1 month, 6 days the next, jobs are rough in and fit out under the direction of us. They invoice us an hourly rate and some materials. Where do we stand?
On that one, I'd probably say they're not really they're working for a result. If you're getting them to come in and deliver a particular result, and it's very, I guess it's just as you need as a business, day here, day there. There's no regular pattern. I'd go through the 9 different factors, but I would actually probably say that would be more onto the lines of the true independent subcontractor that we always had. And I guess the reason the rules came in about super on contractors is the trades industry was a big one for this, where you had, and a lot of the unions were actually the ones that pressured the government on bringing this rule in. You had a situation where in the trades, a lot of them were subcontractors. They worked for the same person, say full time, for their whole life, and they got to the retirement age and they had no supers at all because they weren't deemed to be an employee. So it was actually the unions that lobbied to get a lot of this rule put in. But if you've got someone that's really only coming in as literally an independent, that one would be a real independent contractor. Again, go through the 9 factors, but I would say that sounds to me like if it's just a day, actually here and there, no pattern for a result, they're bringing their own tools. I'd be looking at that bit more an independent contractor.
Yeah, I think it'd be likely would be engaged to other businesses as well.
Yeah.
Duties.
Yeah.
Okay. Do we have any other questions? If you do, please.
No.
That's
great.
Good job.
Yeah, that's good. We've answered everyone's questions. So I guess then, just to introduce, so myself, Daniel's on the call here now, and then some of you also probably would have seen Paul on some of our other webinars as well. But if you've got any questions, reach out, give us a buzz. Try going through with those nine factors and have a look at that. But just try and put something on file so that you're really trying to cover yourself and just to protect yourself for the future and have no surprises up later. But I hope you all have a good weekend. Hopefully, with the Peninsula, well, let's keep our fingers crossed that they'll reduce some of the restrictions we've got now that they have locked all of our borders. So apparently it's almost impossible for anyone from the city to get down to the Peninsula at the moment. So hopefully that'll keep us safe now, and hopefully we'll get back to normal soon. Thanks very much, everyone, and we'll catch up with you all soon.